warm welcome to this special panel discussion that we are doing as part of Niti Aayog's FinTech Month. The subject that we are going to discuss is the implication of the union budget on FinTechs. We have three voices joining us to really take this discussion forward. We have Nithin Kamath, the founder and CEO of Zerodha, Harshil Mathur, the co-founder and CEO of Razorpay, as well as Vivek Belgavi from PwC. Thank you all very much for joining us on this panel discussion. The thing that struck me as I was listening to that 90-minute budget is the number of times Nirmala Sitharaman said digital, technology, fintech, startups, and so on. I think it was unprecedented. And you could really make out that digital India technology was really at the heart of the budget. But I'd love to get your thoughts on this. What really stood out for you in terms of the union budget 2022-23, and what was the announcement that excited you the most? Nithin, perhaps you can start, and then, Harshil and Vivek can take over.
Yeah, I mean, see, there was nothing much for our industry per se, like the stockbroking, capital markets, etc. Nothing really changed. I think this whole acknowledging crypto was quite nice because, one of those things that we've been contemplating for a long time now around is, what should we be doing about crypto as a business? Because our customers out there are investing. So the fact that she acknowledged means that probably, the crypto bill is around the corner is what I'm guessing. So that was nice. I think the whole long-term capital gain, the surcharge, getting capped is very nice because you need more people in this country, to be backing startups and entrepreneurs. So, in the unlisted space, that's very nice. So I think for me personally, these two things kind of stood out as such.
Right. We will, in fact, come to digital rupee as well as CBDC, what it will mean. But Harshil, what did you think about the budget? What excited you the most from a fintech perspective?
Yeah, and I think a lot of things in the budget really stood out from a fintech perspective. I think the most interesting part of the budget is that after every 2 or 3 announcements, there was a mention of technology, there was a mention of digitization in so many different domains. And I don't think we are used to hearing that in budget speeches, at least the budget speeches I grew up listening to, right? So that's an exciting change. And that just talks about how much commitment the policymakers have on using technology and innovation to drive a lot of. I think the talk about setting up 75 digital banking units across the country stood out for us because I think while digitization of banking is a big task, there's still a lot of tier 2 and tier 3 locations where that penetration hasn't happened. Talk of like connecting all the post offices with core banking systems. Spoke about how digitization is a key driver of financial inclusion in the country. And yes, lastly, but most importantly, the CBDC announcement. Right, I think that was something that we have been expecting, but it coming out of budget, and the plans to launch it during this year itself was very exciting. We're yet to see the details on that, but but really excited to see how that shapes up the way financial ecosystem of the country runs. So I think it was a pretty exciting budget from a fintech perspective. A lot of announcements, and we'll see how those get implemented in the actual details.
Right. In fact, we should perhaps expect more detail from the RBI on the roadmap as far as digital rupee is concerned. Vivek, what stood out for you?
I think Nithin and Harshil have had key points. For me, I think the aspect of what was not spoken or what was more indirect in its own right? So like a fintech industry does benefit from large-scale formalization of the economy or the digitization of the economy. So whether you start looking at the capex outlay, it also benefits from the consumer spending. So a lot of capex outlays will have a follow-through effect, and then a lot of details which are hidden there, right? So let's say in a capex outlay for infrastructure, they have spoken about automation of tolls and transit, which is one of the fastest growing segments in payments, or them urging ministries, and we have seen this coming from states, to start setting up payment hubs. Like many of these are pretty large volume payments, which are not exactly going through the core transaction system today. So some of those spaces, or even let's say talking about PLI for electronics manufacturing, which can set up more accessible POS devices in that space. So a lot of those indirect nudges will have a follow-through effect from the fintech industry, in addition to what Nithin and Harshil mentioned.
interesting, especially on the indirect nudges that will come to the fintech industry. Important points on how formalization of the economy itself will help, because of course that will lead to more access as far as credit is concerned. But let me come to one of the most interesting announcements in the union budget, and that was about the government's commitment to a digital rupee. In fact, even in subsequent interviews to us and others, the FM was pretty clear about the fact that when it comes to currency, it only has to be the central bank that's going to deal with it. Every other thing will be considered an asset, quote unquote, so to speak. So Nithin, what is your take on digital rupee? How is it going to be a game changer? How will things change? I mean, if you can just break it down for people who are still trying to get their minds around digital rupee and CBDC, big terms, we've all heard them being bandied about, but why do you think this will be a game changer for India?
Right. No, I mean, to be very honest, I think Harshil is probably better suited to answer this question because for us, I think the digital rupee is going to be game changer for payments more than for someone who's in the broking industry, because everything till date for us has been the digital rupee. In the sense, whatever comes to the capital market ecosystem technically is a digital rupee. There's nothing else. So maybe Harshil, I think you should give a shot at it.
No, sure.
Yeah, Harshil, if you can kind of deconstruct this for us, how will it change? Because for many people, the question running in their minds is, we already have UPI. So what is digital rupee? How does it change things? So perhaps you can deconstruct that for us.
Yeah, so see, I think that's a common misunderstanding that like digital rupee from a consumer perspective is already digital, right? Like you're using a card, you're using NEFT transfer, all of those still money moving in. It's not like somebody's picking up cash and moving it around. The change is more at a fundamental at the back end level. Today, even when you're using UPI, the actual money flow is not happening by UPI. UPI is an information exchange. The settlement happens between banks when they have to do net settlements at the end of the day, whether it is interbank settlement, intra-bank settlement directly with RBI in some cases. And those ecosystems are disconnected from the UPI layers which are built on top of it. And because of which we face sometimes issues like reconciliation challenges, money gets stuck between systems. All of us have faced where money has got debited from your account but hasn't credited from the other side, and all of those things happen because the base infrastructure is still the same along which the money moves. Now CBDC fundamentally changes that, where the money movement happens truly digital in an instant fashion. So when money leaves from your account and goes to the other account, it actually leaves your bank and is going to the other bank. In the end, it's still a database entry, but the database entry is happening real time. End of the day reconciliation or 2 day later reconciliation or end of month reconciliation banks too. I think it makes the economy far more efficient. It makes things that we build on top of UPI and money movement systems far more efficient. And it's the amount of failures and drop-offs and chances of issues that happen in the economy far less infrequent, right? So yes, while from a usage perspective, your rupee is already digital. In the back end, it's not really digital today till something like CC comes up, where the settlement and everything is happening instantly between banks as well. So that will change. Of course, it's a hard problem, and we'll see how it gets implemented in the details. But if it gets implemented the way it is being talked about, then we'll really unlock a lot of inefficiencies in the ecosystem that exists today.
Right. Vivek, if you can give us, a precedent here. I mean, China famously implemented its own CBDC, right? So when India goes about implementing digital rupee, CBDC, what can we take from there? How is it going to be fundamentally different from how other countries have gone about, the whole CBDC rollout?
Good question, Chandra. Probably I'll just, the way to make it simpler to understand, I call it a digital twin of a physical note that we have today. Now, what makes it more interesting, and that's where the use cases lie, is compared to traditional money, including the UPI money, current transfers are not naturally programmable. So all the logic, reconciliation is done separately from the, let's say, accounting. So accounting or transaction is done and everything else happens separately. Now, CBDC at the heart of it, or similar crypto-related currencies, if I make it that broader, anything which is built on blockchain, does allow one to build the programming ability along with it. Now, China is piloting it on a retail basis right now. My money would be on India trying to pilot it first around subsidy payments, because that's a big space for us. Government is focused on reducing inefficiencies there, making it more targeted. Now imagine tomorrow that you can give an education subsidy to someone and you're guaranteed that the money would be used only for education purposes. You cannot you cannot spend that money on anywhere else because it's programmed in the money itself. So I think that part is going to be interesting. Now extending to the programmability part of it, on the corporate payment side, again, there is a fair bit of inefficiencies when it comes to reconciliation settlement, where if you look at some pilots happening in Sweden and Canada, those are the countries we can learn from. But again, India has to think uniquely because UPI, again, there was no precedent for it. So we will probably figure out our own use cases for it, and it's going to coexist with others.
But this would be similar to the e-rupee vouchers that the government was talking about, right? Right? For specific purposes.
Yeah. Yeah. In fact, if you remember, it got almost coined as a digital rupee around that point in time. So, I mean, the construct is similar, except here the technology allows you to ensure compliance to the use, so to speak. There, the use was kind of predetermined by the network you built. You built a vaccination network, you ensure the voucher works in vaccination. Now here you can program that in the money itself. And if you now tomorrow launch a CBDC based voucher for, let's say, vaccination, it will get accepted only at payment acceptance points where players like, let's say, a Razorpay will work on the acceptance infrastructure to work on that. Now, having said that, scalability in this technology is yet to be proven at the levels that we are talking about today. So probably it would be gradual. It will coexist for a bit with other mechanisms and let the market choose where they find convenience. Lastly, if I'm allowed to, we have done a bit of pilots here, and one other use case we find very interesting is in remote or offline payments. Think about even tolls and transit. So a UPI today has a dependency on the network. Now here it is possible to reduce or mitigate that dependency. And think about a rural ecosystem where 80% of the money circulates in that ecosystem. Now you can dump a bunch of CBDC into that ecosystem. The dependency to keep on pinging outside or being dependent on the network and things like that goes down. So it can create those hyper-local ecosystems. It will evolve over a period of time, but some aspects are interesting to look forward.
Got it. Nithin, at the beginning of this discussion, you said that, companies such as yours were awaiting clarity on what happens to crypto so that, you can also determine the course of business going ahead. So again, what does it mean for you? Because initially there was a lot of euphoria, but then people began to, read the fine print in terms of the 30% tax, and then you have a 1% TDS. And then we did a story wherein, this tax would just not apply to people who are investors, but also to Web3 developers who earn in tokens. You will essentially have to pay 30% on your salary. So apart from the initial euphoria, at least the fact that there is a certain level of legitimacy, what does this mean for an entrepreneur like you, for a company like yours, in really deciding the way forward on how to leverage Web3 and crypto?
Yes, Web3. I mean, I think still too early to comment, but at least in terms of crypto, I think the direction is kind of set, right? As in they're thinking of this almost like gold, right? Like how we have that 0.1% TCS on gold. I mean, here it's 10 times more, but it's essentially they don't want this to be like a heavily traded commodity or security, right? As in they want this to be as a lot of crypto aficionados call HODL, right? As in, so HODL. So yeah, so I think that's how they're planning. I think the issue in all of this is some of this, like that 1% TDS. I think it'll make crypto exchanges to survive, very tough, because a lot of these exchanges today depend on trading volumes to to generate revenues, and so they will have to figure some other operating model. They can't really now say that after July 1st, I don't think they'll be able to run this the way they were running traditionally, which is to rely on a lot of trading volumes. Because now after every trade, if 1% is getting away from the from the market, then the volumes are going to dip significantly. So I think what was good was that the direction the government set, saying that we want this to be like a gold, you buy and you hold it if you really want to hold it. Now, the legality of it, I guess we'll still have to wait for the crypto bill. But at least now we know that directionally, this is how the government is thinking about this as an asset. Web 3.0, I mean, it's still really, really early days. I mean, I know there's a lot of noise around this, but I don't know.
Yeah, noise and money, Nithin. I mean, Polygon has raised a $450 million round. So I guess VCs are also voting with their money after, being skeptical for many years.
Yeah, I don't think this money is really India focused, right? This is more,
Yeah.
more global and not really, India specific as such.
Right. Harshil, one other aspect that I wanted to ask you about was neobanking. Nothing specific per se, though there was, expectation, but it's very clear that, this is also an area the government will perhaps look at because you're, again, seeing so many private players, so much of funding going into this. How do you see this going forward in terms of how neobanks are regulated, how they are treated?
Yeah, see, I think one of the things that's exciting, that has been exciting in the last couple of months is the paper that came with NITI talking about neo-banking and digital banking, right? And it is still open, right? And I think we've been submitting our comments, we've been talking to people in the ecosystem, and we really align well with the theme of that paper. Like it talks about a very different way of regulation of neo-banking, a stylized phase manner approach, and it picks up the right examples, right? It talks about examples of countries like Singapore and Africa to Asia who experiment in neobanking, and with a specific focus on MSME as a sector, and how can neobanking or digital banking, as calls it, really change the way MSME sector operates. So we have, I think, given that the paper is already expecting comments and there's a lot of work underway there, I think it's a little early for it to come out in the budget. So, but I have full faith that now that the ball has started getting rolled, we should expect a more firm policy stance on it, on how neobanking is going to shape in India. If it is implemented the way that paper talks about, I think it's going to fundamentally change the way we look at banking and banking licenses in the MSME sector. So we're really looking forward to it.
Right. Vivek, a two-part question. Would you like to add something on the neo-banking part, the digital banking part? And secondly, on the account aggregator framework, I think that was the big game changer in 2021. A lot of expectation that, it will become the UPI for lending. What do you make of the traction so far? Because, the biggest bank in India, SBI, is yet to come on to the framework. So again, will it take a few years before it has a hockey stick moment, just like what we saw for UPI? It didn't take off initially year one, year two, and then, it suddenly saw the scorching pace of growth. Do you see something similar happening there as well?
Sure. Let me put a response on both. On neo-banking, completely agree with Harshil. Like even if it today look at, let's say, Harshil's business or even Nithin's business, in their areas, they've been able to build fairly asset-light setups. Now, similarly, in banking today is not possible. Even the new banking licenses which came up, they really try to force you to build some infrastructure on the ground, right? So, or give you a very limited play. Now, if you go back to the trend like Nachiket More Committee's report, they spoke about creating specialized organizations, someone who is manufacturing, someone who is distributing. So in today's world, if we start co-opting payment companies, e-commerce companies, social companies who are acting like natural distributors or touch points for consumers, then there could be an asset-light model which could act like a bank. Today, in the current regulatory framework, doesn't exist. So to that extent, allowing for that is the trend. So sooner or later, one has to evolve into that space. It will only be positive, and it won't be against a lot of existing banks as well, because they've also started creating like an SBI buddy, a very digital first kind of a play. So I think the timing is right. The broader ecosystem is ready. But for this ecosystem work, data is going to be critical. Compliance is going to be critical. Now that's what second part of your question comes in. Now there again, probably the account aggregator framework as it exists today is trying to formalize a solution which always existed. So including, let's say, Perfios, which is one of the account aggregator frameworks out there, they have been providing toolkits to all banks and lenders to help them get the let's say salary data, their salary statement analysis and bank data and things like that. They were able to do it through some permissions and scraping and other mechanisms. Now an AA framework allows you to do it more elegantly, right? But it's not giving new solution to an old problem, so to speak. I do think AA framework will truly be of valuable if you start getting non-financial data into it. The getting financial data exchange is not the biggest problem for us today. One way or the other, worst case, you give your, let's say, a printout of your bank statement, someone can automatically read it and get the information out of it. So if you develop a pipe, you're not creating an incremental new solution, but you start saying that, okay, I can give you validated electricity bill data, validated telecom data, validated data of your real estate transactions. Now that data is worth in gold because that allows us to create a better profile, create better, tighter underwriting algorithms, probably even start giving credit to the underserved, so on and so forth. So that data gamut has to, I think, expand for that framework to become really valuable and to create a pull factor.
Got it. Nithin and Harshil, this question is for the both of you. One trend that we have seen increasingly becoming stronger in 2020, 2021 is the convergence that we are seeing between traditional institutions and fintechs, which were, in the startup universe earlier, but even they are also becoming mainstream. Bharat was the first to get an SFP license. You are seeing, the likes of PhonePe and others entering the mutual fund business. The likes of Grow is there. You are there competing with the likes of angel broking. And even if you look at banking, ICICI Bank has really upped its digital game. Some would argue that, it is the most sophisticated neobank out there. So how is this going to play out? Do you see a shakeout, a consolidation? Do you think there is space for multiple players? The new age neobanks, old neobanks, an NBFC like Bajaj Finance, which is, lending from its own books. Just want to understand where, how you see the fintech universe shaping up, because there's clearly a convergence now between banks, which are also becoming, fintechs in a way, leveraging technology to acquire customers, retain customers, and so on.
Yeah, no, I think, like I'm sure for Harshil as well, even for us, the entry point wasn't too high. To become a stockbroker in India, you need 1 crore of net worth, right? And you didn't have to have 20 years of experience and all. I mean, in the sense, the only reason we are around is because, the starting point wasn't too high for us, right? As in, I mean, still 1 crore and a half is some deposit, but, we could become a member back in 2010. But one of the problems that we want to solve for is that, the banking experience, the money experience isn't that great, So if you were to compare Zerodha to an ICICI, I think, where we lack in terms of our experience is, as soon as it comes to fund transfers and withdrawals, right? And we've been wanting to solve this, but you know how it is to get a bank license in this country, I mean, we actually went back to look at the payment bank license, because in a way, what payment bank license stood for is really what we need. Right? I mean, we don't want to give loan. We want to essentially cover for the experience of moving money to, fro, etc. So I mean, I like this whole, if there is regulations around neobank and that helps us solve for that problem, then, the user experience that we offer, so we can also catch up to a bank. Now, once you're a bank, you can potentially do everything, right? So it is, and it's a given. I think in today's world, in a technology first world, the traditional folks will have to, up their game in terms of tech, or they will not be around for too long, because like we've seen with BharatPay, right? It's just, and I'm sure Razorpay as well, in a few years, it'll soon be a bank. And so you can't just, based on your legacy, still, hang around doing whatever you're doing 10 years back. So it's, and you're right, as in ICICI Bank is an amazing product, I mean, and it's just a matter of time. I think, they will want to do everything that, Zerodha and, Razorpay is doing as well.
Harshil, is the moat big enough for fintechs to counter the behemoths in banking as they up their tech game? I mean, there's a lot of jokes going around about HDFC's tech, or, some other banks' tech, but only a matter of time before they up their game. I mean, ICICI has really managed to do it in the last year or two. So do fintechs have a big enough moat?
Yeah, I think the way I look at it is that, like, at least I can speak from Razorbase's perspective, right? Like, we don't really see that much value in getting that license and managing that entire infrastructure. Honestly, there's not a lot of differentiation to build there. It's something that we have to do, because if we have to constantly build scale on, let's say, on our neobanking platform, and if we do provide all of these services, the only way to do it today is either partner with the bank and have to be open to do that partnership in a deep fashion. If that doesn't happen and we are not able to get the right services out to the customer, we'll have to do whatever it takes to serve our customer, right? Like whether it is license, a banking license, payment bank license, whatever license it takes. Because in the end, see, we are the way we are working is very different. It's very different than a bank. A bank gets a license first and then opens all of its services to the customer, and they can choose and pick whichever services they want, right? Versus for us, we have chosen a customer segment. We want, like, for us, that is internet for these. And we want to serve that customer segment in the deepest way possible. We feel that they have a lot of needs on payments, they have a lot of needs on bank, a lot of needs on credit. Now, if we can partner with someone that fast and quickly, we prefer to do that because so that we can stick to our core, which is product and tech. But if that happens and it requires us to get a license, we'll go ahead and do that, right? So I think the approach is different. And yes, you're right that some of this will force banks to up their game. They can protect their turf in the segments that companies like ours will get into. But I think the best approach is that, like, it's really impossible to stop disruption. Like if you say that, hey, we'll do everything ourselves and there's no need for FinTechs to happen, I don't think that's going to work. But the best way to handle disruption is to embrace disruption, right? So if there are banks, there are definitely banks, and ICICI is one of them, which have taken that embrace approach. They are working with a lot of techs. They're opening up their doors, they're opening up their APIs and all of that, so that FinTechs can build on top of it and they can jointly go and serve that customer base. I think that's going to be a winning proposition. Otherwise, we'll have to look forward to the Niti Aayog digital banking license the way it comes out.
Chandra, if I may add on to this, I do think there will be certain spaces where the divergent will exist, and for the right reasons, which is as soon as anyone becomes mainstream, and whatever definition of mainstream will pick up, whether listed or not, the market the stakeholders start motivating themselves to start focusing on profitable business. Now, there would always be a space, and not as much for expanding into a new business area, and expanding into many new business areas, like think about wallets when they did, are not profitable in the short term. You need to have a very long-term view. So you would need different type of capital to encourage that long-term view into building businesses. So the way to look at it would be, there would still be businesses which will raise money from probably VCs, PEs, or go through that route, which will take long-term view into building businesses like wallets and similar things in future. And there would be need for some mainstream stuff who are focused on delivering experience to the current set of consumers and taking them on their journey. So difference between those two type of markets. In India, the second market is still big. In most of the product segments we are talking of, our penetration is in single digits. So there would always be, at least in my mind, for at least a couple of decades, a need for that second investor forward ecosystem to exist, as important as the former one to exist.
Got it. The other big announcement in the budget was, of course, on the LIC IPO, and Finance Minister Nirmala Sitharaman was very confident that it would happen within this fiscal itself. Nithin, I'm going to get your view first. You track the markets very closely. So what do you think the ramifications of the LIC IPO is going to be for markets, for insurance in India? And perhaps I will bring in Harshil and Vivek on, the whole InsurTech angle. LIC, interestingly, recently tied up with the PB FinTech, Policy Bazaar, for distribution, which I thought was an interesting move, because they always swore by their agent model. But Nithin, what is your take? Markets are a tricky place these days, but what's your take? This is going to be India's biggest IPO.
Correct. Yeah. No, I mean, see, it's very exciting for us as a business, because the IPO can potentially get a lot of first-time investors to the market. We've done a bunch of partnerships, to kind of facilitate that. But the other flip side here is that markets have been in a iffy spot over the last few weeks, right?
Yeah.
So I don't know. I mean, I don't know when the IPO launches, how. I mean, think about IPOs, it's also about a lot of luck, right? As in the sense, if markets are in a good period, bad period, and it's a large IPO, right? And I'm sure the IPO will go through, but I'm in terms of retail appetite for this, right? How much will be the retail appetite will be interesting to see, because currently, in today's market, there's a lot of, suddenly there's that whole fear creeping in about, if the markets are going to hold up are going to fall right now. And so, but very exciting time, to have the LIC IPO itself, because we've been looking forward to this for the last 2 years, and we just recently spoke to DigiLocker, and he said, what, LIC IPO is around, and you need to make sure you're up, because all the new account onboarding happens through DigiLocker, right? So and yeah, and I think that way we're going to see, like, I think whichever is the month when they plan to launch the IPO, I think India will see probably the largest month in terms of new account openings, for the capital markets for sure. So.
Interesting. Harshil, what is your take? What impact is this going to have for insurance, the insurtech space per se? Will that become even hotter? It's been getting a lot of attention in the last year. We've seen a lot of new age insurance firms come up. So will this again give that some momentum?
Yeah, see, Nithin is the expert on markets, so I don't think I can add much on how the IPO will go or how it will affect the ecosystem. I think he is the expert on that. What I can say is, from an outsider perspective, I think there is at least in the fintech ecosystem, and we work with a lot of
fair in some of the new age tech IPOs. That's the only thing I can say.
I think, LIC is a large, formidable organization. It has reached through the years and it has maintained its leadership position. So I think it's a very different kind of IPO, and there's a lot of excitement. It's like there's nobody in the country who has not heard LIC's name, right? So and it's one of the most successful PSUs we have, right? So from a fintech perspective, I can say, like, a lot of I think now LIC's participation, for example, Policy Bazaar is also showing that they're also opening tech, and they're also opening up to digitization and fintech ecosystem in general, which is exciting, right? So if the IPO goes well and gives a push on fintech, maybe like after the IPO, they'll do a lot more stuff in the insurtech space, which itself is getting really excited, which is really exciting, right? So from that perspective, I really look forward to it. But like how the markets behave and how they shape up, I'm really not an expert on it.
So I'll just pick up the last point Harshil mentioned, which is LIC. That way, they are a veritable warehouse of excellent data, the best data which this country can have around insurance behavior. They have been the leaders for decades and decades. Now, if this move also gets them to start opening up to fintechs, and let's say I'll put the Policy Bazaar example you give in one example, right? So they're using them as a channel at most. But as they start allow folks to start working with them to co-create products, it can really change the face of insurtech, as we know, because most of the insurtechs we work with do work with very thin data sets. And let's say a new insurance company today is even more trickier than a neobank in terms of regulations and things like that, right? So from that perspective, it's very exciting. Also, their ecosystem is pretty massive. So I'm not sure how it will play in IPO. Again, Nithin is the champ there. But 1 million plus agents, 80 million plus customers who are aware about it. So the number of folks who have got a touch and feel and alignment with that, who might want to participate, is quite good and quite high. So time will tell, but I think those two are the other interesting aspects from when we look at something in LIC. For all of us, it would be a good one to see it happens well. It does set up a good precedent and would be a boost into a segment which typically gets a little bit undercovered, right, compared to payments or credit or even like stock markets. It does not very exciting. So it would be good and it's an important product. It's a very, very important product which should be known and adopted a lot more than it already is.
Right. In fact, that brings me to the final part of this discussion. If I step back, a lot of different elements are coming together for India, almost like Lego blocks, right? You have payments, then you have insurance, then you have credit, access to various investment products, and so on. Together, Nithin, how will this really shape India, this decade, whichever way you want to call it? What larger impact is this going to have?
Yeah, I mean, amongst all of this, right, I'm most really excited about account aggregator framework, in the context of what we are doing as a business. I mean, like Vivek just mentioned, not just the banking data set, I mean, you need everything else. You need the depositories on it. Because, all these new people who are coming to the markets, right, and people who are opening accounts today with brokers like us, they want to do better with their money, right? And that's why they're coming to us. Today, we're a transactional platform. So we don't we can't really advise the customer anything because we don't know anything about the customer, right? And and people, for a loan, someone might give you a statement, but if I were to tell someone, what, I can tell you what to do better, no one's going to share the bank statements, the holding statements, etc. Right? So we have never really attempted to solve that advisory problem because there was no tech way of solving it. I mean, today the only way to do it is the traditional way. So I think just in terms of all the rails that are put in place and the way the government has been talking about tech and etc. I think directionally we are heading there, where tomorrow, platforms like us can also enable advisory, because it's very important to get people to do the right thing with their money, right? Because let on their own, many of them can make mistakes, right? And if we can get people to do the right thing, it's amazing for the country, because if we can directionally help the guy do better with the money, that means more money will come to the financial ecosystem, right? More money will find in the hands of the entrepreneurs, so which will in turn help the economy. So for me, wherever I have an opportunity, I keep peddling that people should take account aggregators more seriously, because once it's in full force, I mean, it can enable a lot of different type of opportunities that we haven't seen today.
Nithin, in fact, let me just ask you a full follow-up, quick follow-up question on that, since you spoke so much about the account aggregator framework. What do you make of the adoption that you've seen so far? Is this something that you track regularly? Has something surprised you, not surprised you? Just your quick take on that.
Yeah, no, I mean, see, it's still beginning days, right? Like until all banks are on it. Like, like say it's Zerodha, it's 30% of our accounts are State Bank of India accounts, right? So, so if State Bank of India is
and
not...
SBI
framework, right? So I, like I said, I mean, it's like, it's a UPI moment waiting to happen. I mean, one of these days we'll get up and we'll realize that someone has built this solution and all the banks are on it. Then depositories will get forced to be on it. And then, there's a breakout types, so it's the thing about UPI is Aadhaar, UPI, etc. Right? For Aadhaar, there was government which was pushing it. For UPI, there was NPCI. I mean, and even the RBI pushing for it. So today, I think for account aggregator, there isn't anyone really pushing for it. Right? There isn't like a lobbyist of sorts as such. So I think we need more folks to come forward and like try to push for this account aggregator to get implemented in full force. I think it'll do a lot of good to the country.
Right. Harshil, the broader question on, how all this converging is going to have a macro impact, payments, all the rails coming together.
Yeah, I think payments, India's payment recession has been a success story, not just for India, but across the world, right? Like the way UPI is shaped up in the last couple of years, it's not just regulators, but the regulators, policymakers, players like us, the merchants and consumers all working together to really this world-class payment infrastructure. And we've seen how it has really changed the way payments operate in India. And I think we are in a very exciting time right now where a lot of people have learned how to pay and pay for services online and pay for services digitally. But the second order effects of that are yet to happen, right? Because more transactions are happening, so you have more data available, and you're now seeing easier happening because of that, easier access to credit, not just for consumers, but also for businesses is something that we have been focusing a lot on. And such second order effects, I think we'll see a lot of them take up shape in the next 2 or 3 years, where because more people are digital, people are doing digital transactions and using technology to do things that they typically do offline. We'll see that shaping up into second or third order effects in form of credit, in form of loyalty, or multiple other things that get built on top of it. And I think one of the things that two things that actually I'm most excited about is the CBDC, right? Like if that gets launched out, like Vivek said, it essentially makes your money programmable, right? The opportunities with that can be endless. We are yet to see how it gets implemented, but if it gets implemented in form of programmable money, the kind of things that you can build on top of there's so many opportunities that I can't even give examples of it, right? The second thing is like the digital banking infrastructure that Niti Aayog talked about in the policy paper, right? Again, if that gets opened up, it will allow fundamental disruption in banking space, right? So far, disruption in banking space, but it has been from outside where fintechs work with stuff to do things. But if that stepwise approach happens, a lot more smaller entities, somebody who doesn't have like hundreds of dollars to establish a full universal bank on day one, but wants to experiment something for a small portion of customer, can try and then scale up and show to the regulators and then over time get a full banking license, right? Like that kind of disruption on the banking license framework could be massive. So those are the two things I am really looking forward to it, but mostly really it's the macro impact of this digitization journey that's happening in India and last years.
Right. Vivek?
And Chandra, I would put, I was thinking of the response and I thought, let me put it like I wish, because it's a decade, a lot of things can change. So first one was the way we at some point had an education mission of literacy. I think if on a financial literacy, which will include people to understand and transact, and if we start hitting 50 to 70% of our population, which by my guess today would be around 20 to 25, would be one wish list, so that it is inclusive, it is really broad-based in the truest sense, right? So, which includes knowing about how to do it, wanting to do it, engaging in it, and linking it to your own economic productive life, like that whole virtuous life cycle, what a good financial prudence or financial management can give one. The second one is, as the base is increasing, we spoke a little bit about taxation. If you are collecting 30% from 100 people, let's start collecting 3% from 10,000 people, right? So how do we get into that pace? So allowing the shadow economy to reduce, increase the incentive or decrease the disincentive not to get into the formal ecosystem. We can't formalize it by 10 times and still keep that same tax rate. So how do we see that we have the similar collections for us, but at a lower tax rate, but a larger base, and allowing for more folks to play into the economy and the ecosystem? And the last one, as we go around the world, as I've seen banks and neobanks in UK, in US, and many of these markets, I do think a lot of our tech, our experience is world class today. Our UPI and NPCI is the best payment platform in the world. So how do we start getting it? But at the same time, both technology in TechFin as well as in the banking space, we are very shy. We are not big in the global markets. To see that some of us aspire to become multinationals and get into other markets would be the other wish. To call it digital diplomacy, call it ambition. But how do we get this across our borders would be the other third wish, I wish.
Right. Okay. I'm going to let Nithin and Harshil perhaps have the last word. If there is one big prediction that you have that will happen because of the budget, long-term implication in 2022, a big trend that will play out because of the budget, what will it be? Nithin and then Harshil.
Sorry, yeah, I was on mute. Okay, so now I can tell you, just the talk in the community that I know, there's a lot more interest in investing in startups, right? And this whole conversation of, surcharge being capped, directionally, I think it's just gotten more people, like the more people in the
fact that angel investors will have to shell out lesser. But there's still a huge variance between domestic angels and foreign investors.
Yeah, no, but the thing is just that the directionally, right, the talk has gotten attention, right? I mean, saying that government's thinking of, maybe bringing down the difference, so that's because, like I said, there wasn't too much spoken about our industry, I mean, really, the only thing was this, so I think platforms which are enabling, investing into startups, are going to get a lot more traffic this year.
Interesting. And I think they can do with that amidst the fall in markets and foreign funds clamping down. So that's an interesting prediction, Nithin, the fact that more people will get into startup investing. Harshil?
Yeah, I think if the CBDC things is implemented, right, it has broad-reaching consequences, right? But one thing I can say is that if it is even similar to, let's say, what has happened in other parts of the world, you'll see embedded finance scale up in an even more significant way than what has happened so far. Like, I think every company will basically be able to pull in some APIs and be able to build finance and embedded into their own ecosystem, right? And I think we'll play a very significant role in that. But I think that is one prediction I can be soft in next 1 year once it gets launched.
Great. On that note, thank you all very much for joining us for this discussion on the implications of the budget for fintechs and how it's really going to shape India going forward. Thank you very much for joining us.
Thank you.